Good morning. Welcome back to Financial Issues. I'm Dan Celia. It's great to be here. 866-300-9298. That's our phone line. If you want to queue your call up, you're welcome to do it. We're going to get to calls earlier. You know, Friday, of course, being Good Friday. So we won't be doing our Rapid Fire Friday as usual. So get your question in today and tomorrow. 866-300-9298. If you want to weigh in, that would be great. We'd love to hear from you, and we are going to get to the callers. Well, a little bit of economic news. We had housing starts come out and the housing number. So this is building permits for construction along with housing starts. And the headline says housing starts rise in March to 946,000 annual rate. The problem with that is it misses expectations. They were expecting 990,000 and they got 946,000. Housing starts up 2.8%. So you look at that and you think, well, that's good. Housing starts up 2.8%. The problem is, don't forget, this is a March number. January and February, as a result of the horrible weather, cold weather, that most of the country has seemed to have had, they were expecting something a lot bigger than this. Now, here's the thing. Does that mean that the bad January-February number was not a result of bad weather? That's what some are suggesting. I don't think that's the case, by the way. But nevertheless, that may be, we may be thinking about that. There may be some economists thinking about that. So housing starts up. Also, permits issued was down as well. As a matter of fact, the starts rate at annually 5.9% from a year earlier, I should say, is the worst number since, or a contracting number since April of 2011. Now, permits, that is a sign. Remember, permits are a sign, of future demand. So permit number, of course, very important as well. But permits also fell 2.4% in March at an annual rate of 990,000. And that was primarily led by a drop in apartment starts. Now, the other thing was on the housing number that we got being up, the starts number being up a bit, that was mostly single family housing. So I believe it's the fourth month in a row. I'm trying to remember. It may have been the fifth, but I'm reasonably certain it was 4 months in a row, where the majority of the starts have been single-family housing. And that is a big turnaround because back in 2010, 11, and half of 12, the majority of the starts were in multifamily housing, apartments, condominiums, townhomes, those kinds of things. So it's good to see single-family housing up a bit. That would mean, I hope, that inventory is coming off the market. And that's a good thing because we need that to happen. European stocks stay strong after a weak inflation data. I talked about that yesterday. They're having solid gains this morning as a result of an inflation number that has come down a little bit. And that's good. I mean, you want to see inflation kept in check, but it has been coming down now for a couple months. And I would think they'd become a little bit concerned about deflation, although that doesn't seem to be the case. China's growth rate slows to 7.4%. Wouldn't we love to have a 7.4%? But for China, this is not good news. And for Europe, this is not a good news. And it's not good news really for the whole world. China's economic growth slowed again in this last quarter, the first quarter of the month. And that is an issue when we think about sustainable path of growth without some political dangers. What does that mean? So here's the deal in China. It's real simple. The communist government in China, the dictators, they all wake up every morning and think, wow, we got to create 8 million jobs today. The reason why they think like that is because they know that the only way they are going to keep in check social unrest, keep in check a revolution in the nation against the communist government is to make sure as many people as possible are working. And if that starts to fade away, which it has been, then they have some concern, right? They're thinking, it's just a matter of time before there's social unrest. It's going to lead to a revolution, and they get concerned about losing their job, or worse yet, get concerned about military intervention into their neighborhoods and country. So some concerns on China. Apparently, the 7.4% is good enough for the European market and the Asia markets because they're all up. Good enough for the U.S. market. U.S. markets, of course, up yesterday. The Dow closed up 89, the Nasdaq up 11, the S&P up 11 or 12. I'm sorry. So the market's up, not huge, but the markets were up. U.S. Bancorp. Some of you may know U.S. Bancorp. It's the nation's biggest regional lender. Regional. Not necessarily national lender. They're out of Minnesota. They're a Minnesota-based company, and they are the nation's largest regional bank and lender. Well, their net income fell 2.1%. This out this morning. Their net income fell 2.1% to $1.4 billion from $1.43 billion. That's about 73 cents a share on the year, missing expectations. So we're starting to see some of the regional banks start to suffer this year. Now, the fourth quarter of last year, before those numbers came out, I said, I'm very concerned about the banking and the financial sector. Remember, the financial sector is about 21%, give or take 21, 23%, somewhere in that neighborhood of the market. It's huge. When we have a banking crisis like we did in 2009, that has a dramatic impact on the markets. It's a big chunk of the markets. Not to mention, it has a contagion effect in other areas of the market that may not necessarily be financial areas, but has a contagion effect on the other areas. Banking is huge. So this regional bank now taking a loss. Now remember, we had Citigroup reporting on Monday, one of the largest banks in the country, also seeing that earnings were good. They met expectations, but their sales, for lack of better, their earnings fell. Their sales numbers fell, but their bottom line earnings held their own and were pretty good. So these are regional national banks. Then today also Bank of America. Bank of America, it's the second largest U.S. lender, period, in the country. The second largest, that's Bank of America, swung to a loss. The company booked a $6 billion cost that was tied to the mortgage disputes. Huge number. And so, that's a big deal. First quarter loss, $276 million loss. That is not good news. And the interesting part, so now, you've got three, Citibank, Bank of America, and U.S. Bancorp, not looking so hot right now, right? You think that impacts the markets? What do you think? Of course not. In case you're wondering why I talk about irrational enthusiasm, the key word there being irrational, you understand why. There was irrational enthusiasm January, February, March, April, May, June, July, August, September of 2008. Now, I've told this story before, I'll tell it again. Back in December of 2007, by the grace of God, I determined through some of my research, the research I continue to do every week, I determined that the stocks were far. Now, I wasn't predicting, and I did not go on the air and predict a coming crisis in fall of 2008. I did not do that. What I did say and what I did know was that something was wrong. This enthusiasm that had been going on for a number of years, that stock fundamentals, company fundamentals, were not strong, and they were overvalued. Huge problem. And I knew something was wrong. And I went to about 40% cash because I wanted to see what the first quarter of the next year brought. That was my thing. I said, I'm going to go 40% cash and let's see what happens in this first quarter. I'm a little nervous. Now, again, I wasn't expecting what we got. But then in March, Bear Stearns went under. Now, they say they didn't go under, but they went under. And the bank, the government held a gun at the head of J.P. Morgan to buy him out for some ridiculous, like $1 a share or something. So they didn't go under. But as soon as that happened, I ended up going about 70% cash, so I weathered the storm well. But there are some indicators now, and I wrote an article about this. You're welcome to go and read it at christianpress.com. If you go to christianpress.com and you click on, a columnist or opinions, I forget which tab it's under, you'll see my name. If you click on it, you'll see all the articles that I've written. But if you go back, I don't know, maybe 6 weeks or so. But I wrote an article about predicting the markets, and I talked about insider trading, what insiders were doing. And it wasn't my data. I was quoting data that was coming out of Princeton University by 3 economists that I know that were put together. What they did was they went back and they looked at what insiders were doing in 2007. And when you looked at 2007 and what insiders were doing, based on the data that I get every month about what insiders are doing, because they have to file a form with the SEC, so it's public knowledge, and I get all that. So I'm looking. So when you go back and look at that, and these economists from Princeton did that, they went back and looked at 2007. Well, what they noticed was that part of the group of insiders, some of those that were considered insiders, were corporate board members. Now, they determined, which I agree with, that corporate board members really aren't insiders. They're not even close to insiders. They know what they're being told, period. That goes with every board. Frankly, all boards that I sit on now and any board that I've done consulting with are all the same. So they're not really insiders. So what they did was they took out corporate board members from that insider look in 2007. And what they found were the insiders of the corporations. These are the upper executives, the senior executives of a corporation. And what they found is they were net sellers going into 2008, and they had called it right. Well, what they found, and I did, I put my 2 cents in and wrote this article, again at christianpress.com, if you want to read it. What they did the same thing now, and they're finding out that corporate insiders, as they define corporate insiders, are in fact net sellers. Should we be alarmed? Yes. And I use the analogy all the time that if I were to tell you not to buy ExxonMobil for some reason, and a corporate senior VP, a friend of yours, next door neighbor of ExxonMobil, say, oh no, things are really good, we got this, and this, go ahead and buy it. Who would you believe? You'd believe him, right? Because he's inside, he knows the deal. That's what's important. And they're net sellers. They've been net sellers all year long. So we ought to be thinking about that. 866-300-9298. Dan Celia, Financial Issues. We'll be right back.